Guys, not sure if you guys watched the central banker Jerome Powell, Federal Reserve Jerome Powell, guys. He did a speech today. I watched the whole thing. I would say about 90%. Of course, I zone out a little bit here and there. But basically what I would like to talk with you about is the fact that XRP is up, on a side note from the whole speech, but how basically the only way to get inflation down to 2%, from what I gathered from this thing, my entire opinion of the Fed meeting on what happened just a few hours ago, is that, and it was pretty fun too, watching the entire Fed meeting after it had streamed and then seeing XRP up after it's been up for a few hours, guys. I've been moving a little slower today. So my point is we are looking at this kind of stuff on this channel, on this chat. I'm not even on a motherfucking live, but you know what I mean. We're looking at this shit on this channel, on this chat, guys, because Fed, the central banker, the main guy at the central bank, Jerome Powell, came on today and he said, you know, I am here, guys. I am letting you know that we are going to have to induce some pain to the economy to get inflation down to about 2%. I mean, if you guys got anything else from this argument, let me know. I'd love to know your feedback in the comments section, so you're free to, you know, drop some something in there and discuss your emotions on the whole topic. But basically what I gathered from the whole thing is that unless we see unemployment come up, we're not going to see the target of 2% as we need to see. And the government, doesn't matter what external factors are contributing to that number reaching 2%, we have to take necessary steps to achieve that for the world, basically. That's their job as central bankers, guys, to basically, you know, print money and then try to control the money supply. So, I mean, it would have been a lot better, I think, had they maybe not printed the money and just suffered the decline then, rather than bleed us out slowly with, you know, having to issue more bonds and all this shit, all this stuff that's going on with the stock market. So we need to see induced pain. Me and you watching this channel, everybody has to see induced pain now because they have to get a target rate of 2%. So like I said, guys, XRP soared today. On a side note, it's kind of ironic that the motion to dismiss the main argumentative case against Ripple being a security, that they, you know, the executives of the Ripple Labs, you know, sold these coins, these tokens as a unregistered security. You guys know the story. We're not going to cover it. We haven't covered it much on this channel. It's because I don't want to cover it much on this channel. But we are looking at the price, of course, of XRP. That is at the top of the list for sure, because we've been looking at Stellar Lumens go up today. We've been looking at XRP go up. And if we get coins like Neo and even if we get Ethereum go up and ERC20 tokens, even better. You know what I'm saying? So that's kind of what we're looking at, guys, on the channel. That's about all we got. I recommend go back and watch the Fed meeting, because if you're interested in money like I am, and you know how money works and stuff, you gotta see the perspective of a central bank standpoint, and these exotic tools that they seem to create out of thin air to show an aggregate target they think they're going to land that is no closer to landing than that fly on my fucking head, guys. Because inflation's got to go up. Goods, anything natural resources, all from basic raw materials, all that stuff's going to go up, and it's going to have to pull from some of this equity that's in a lot of these housing. That's just one, guys. That's just one thing it's going to have to pull from. It's going to have to pull from the fact that you're just not going to be able to get a loan. It's going to be harder to get a loan because it's going to be more expensive to borrow the money, and the rates have not even been fully affected by the Fed charging the bank or raising the federal funds rate. All the federal fund rate does, guys, is that's the first step. All the steps after that come after that, and the effects of that Fed fund rate coming up, because the banks react to that, and then there is a time lapse between the actual fallout of, and I'm going to call it a fallout, but basically, basically the fallout of modern day banking, guys. I mean, if people are going to be so just over it when it happens this time, or at least a large portion of people will, they'll be like, dude, seriously, again? Because you're getting people like me doing that. So if you have people like me doing that, there's a lot of other people like me doing that. You see what I'm saying? So that is the main thing I'm trying to get you guys to understand, is that this is simply somebody turning on a money printer and now trying to create all these tools, which is basically just raising the rate that the banks are going to be charging overnight to lend each other money, guys. That's basically the main thing that's taking place here. But all the effects after that, that's what we're covering on the channel, guys. We're covering, you know, it's basic logic, guys. It's not economics, it's basic fucking logic. You print a bunch of money, either physically, digitally, fucking melt gold and put it over steel. I mean, whatever diluted way you want to inflate your fucking currency, it does not matter at this point, because it's already been printed. The money is already out there, and the Fed has gone, they haven't said it with direct quotes, but what at least I got the inference they were trying to convey was they don't know how much money is out there, guys. That's the thing. They don't have a clue. They are so far from having a credible idea of how much money is out there. They do not really know. So now they're trying to figure out how to fix the issue now that these, you know, amortization, all these loans are coming due, refinancing needing to happen, and a whole issue, they're issuing a bunch of bonds as yields are rising. So go and look at the stock market, guys. Look at the bond market. Look at how all these things trade and interact with the economy. If you want to take it more in an economic sense, we're not going to follow that on this channel, guys. I'm more following how these things introduce price vectors to cryptocurrencies. In particular, altcoins is the main thing, because it'll come through BTC and Ethereum now, and maybe that was some kind of underlying hidden, not hidden agenda, but hidden know-how by these people, this hierarchy in crypto, that are sitting here trying to at least get crypto under a wrap. So, you know, at least crypto is safe, because if we look at Binance is already controlling the world gold market kind of through this Tether thing for the last few years. Not Binance, I'm sorry, Tether. So there's all these things that are coming unpegged virtually right in front of our eyes, you know, what we're seeing according to Powell, like what all these things we're experiencing. So you'll experience one thing, but the reality is actually much different, guys. So that's what I'm trying to get you guys to see, is the reality is actually much different. And the more that you focused on that is when you'll be able to kind of understand more of what I'm talking about. So I'll take it a step further. Let me give you an example, guys. If we're just following the stuff that is being said and not following the action of what is going on, where the actions are going on. Remember, guys, Binance is Chinese, guys. I've been saying that for over a year on this channel. If China and the stuff that is going on with Binance, while all this other stuff is going on with, you know, Coinbase and, you know, Binance, all these back and forth geopolitical things, there's still, while all these things are going on, a certain amount of some of these cryptocurrencies. So the fact that there's only a certain amount of some of these, it's almost like something that is unaffected by all these other things trying to keep this faulty economy, you know, all these monetary instruments that they have inversely pegged each other to keep it all afloat. Those are actually happening in front of our eyes, guys. So that's what we'll actually see. But we'll actually see these cryptocurrencies actually have these external things like a finite supply, guys. Isn't that great? Don't you know that there's not going to be ever a certain amount of a certain crypto that we discuss on this channel? And that's because I only talk about mineable ones, guys. That's the reason. They're mineable. So guys, it's coming up on 9 minutes. We'll wrap it up. And guys, that will wrap it up in this episode where we just discussed not financial advice, you know, basically just my opinion on what it would be like to be a central banker, guys. You basically just hit a money printing machine and then invent all these nuanced things that are just very eclectic in the scene of money making to basically fix all these problems by just hitting that print button, whether it's digitally, you know, figuratively with these lower interest rates, whatever you're doing to create this momentum growth that is just artificial for no point. We might as well just leave the printing button on indefinitely and drop the rates to fucking negative like Germany did. I mean, fuck, man. Guys, drop it in the chat if you like the videos, if you like the stuff I got coming out. We will catch you guys.